Hi, I'm Jenny Brown. Welcome to this week's MFB News. I hope you are all incredibly well, that you had a wonderful, lovely long bank holiday. Wasn't it such a treat to have some sunshine on a bank holiday? How very un-British of us. And let's hope the weather holds out for all the coronation celebrations this coming weekend. We're off on a big family weekend away to Dorset and the prediction is rain, so it could be a very long weekend for me. Now, in terms of what we've got for you this week, we're going to talk about what's been happening in the lender space in terms of pricing, touch on swap rates. As we all know, that's really important. We're then going to move on to talk about house prices. There's been some surprise news there. And then lastly, I'm going to bring you up to speed on the latest news, and there is some news with regards to me getting my house back from my non-paying tenants. We'll cover all those things off for you this week. Okay, so first up, lenders. So it has been a fairly subdued week in terms of changes. I think that's to be expected. First of all, it's a 4-day week, so that obviously constricts things. But also, because swap rates aren't really moving, they're stuck at between kind of high 3.9s and high 3.8s. It's just kind of moving between the 0.1% kind of margin there. We're not seeing a huge amount of changes, so lenders' cost of funds aren't moving, which means that actually in terms of lender pricing, there's not much that's really going to change, apart from small tweaks here and there, with lenders just adjusting things slightly to try and just drive up business volumes. So it's not that their cost of funds has really moved and come down. We're not going to see any large changes from lenders, but what we are seeing is just minor tweaks. So what have we seen this week? So we've seen Virgin, first of all, increase their rates. So increasing, going up by 0.3%. So their rates are now from 4.28%. Now Virgin have been pricing incredibly competitively, so it doesn't come as a huge surprise they've had to kind of pull things back. However, we have then seen TSB reduce their mortgage rates. Their pricing is now from 4.49%. So these guys were slightly higher and have come down. Now we've seen Landbay increase their 2-year fixed rates. So these are now from 4.49. Now Landbay is a very different lender to TSB and Virgin. So Virgin and TSB are a kind of clearing bank vanilla lender who are lending to individuals only, no HMOs, no multi-units, maximum of 10 properties in the background, that kind of stuff. Landbay, specialist lender, limited companies, no maximum properties in the background, HMOs, multi-units, so very different kind of offering. So what's interesting is that actually comparatively, Landbay on 2-year rates are now pricing at the same kind of level as TSB. However, you know what I'm going to say, there's very large difference in terms of the setup costs for doing so. So Landbay's products at this sort of point, as it were, come with much higher arrangement fees. TSB on remortgages, free valuations, free legals, you won't get that with someone like Landbay. Now we've also had an announcement that Foundation Home Loans are, last night at 5:30, were withdrawing all of their products and they were going to bring out new ones. Now hopefully what they didn't tell us is what the new ones were going to be. Now generally speaking, what we find is that if lenders are going to down price, so bring their rates down, they will say we're withdrawing our rates and we're replacing them with lower ones. When they're repricing upwards, it tends to be they're quite silent on this point, so we're just withdrawing our rates and they don't tell us what the new ones are going to be. So as a broker, it's quite difficult because you're invariably using a lender like Foundation because of their criteria. So you're kind of looking at their options and thinking, if I apply now, before the rates go, is that going to be better or worse for our client? Are they going to be better off waiting until tomorrow or not? But we are where we are with that. So, and as I mentioned, you know, people use Foundation because of criteria, and that would be absolutely, you know, a fair summary of things. Specialist lender again, lots of great things. The thing that they have in their sort of toolkit, as it were, of USPs is that when they're lending to limited companies, they are not taking personal guarantees from shareholders. They're only underwriting the directors. And this facilitates people to have slightly more complicated company structures. So for example, if you want your children to have a shareholding, it might be that one of your shareholders is non-UK resident, as an example, because the application is always focused around the directors. So interesting to see what Foundation Home Loans come out with, and I'll update that, bring you up to speed on that next week. Now lastly, we've seen TML reduce their 2-year fixed rates. So as you can see, things are kind of just, some are coming down, some are coming up, but they're all kind of broadly landing in the same kind of region, which is quite interesting at the moment. So 2-year fixed rates have reduced from TML, and these are now from 5.09%. And as you will guess from those kinds of interest rates, specialist lender. The other thing that's been quite interesting is that Accord Mortgages have repriced in the 80% loan to value sector. So there aren't that many lenders in the 80% loan to value space. I think what's been interesting for us, so when we were in COVID, and there was a lot of uncertainty about the market and how it was going to fare. Most lenders withdrew from this 80% loan to value bracket because no lender wants to be lending at really high loan to values in a market where house prices are coming down. And there have been lenders that have subsequently come in, so there are 80% loan to value rates available. Because we have then the rental calculations to consider, what you'll find is that it's actually quite hard to get to 80% loan to value borrowing, apart from those regions which yield incredibly well, so places like potentially Wales, the northeast, potentially the northwest, or on properties which are very high yielding like your HMOs. However, Accord have repriced their 80% loan to value products, and these are looking very, very competitive. So they have 2-year fixed rates from 5.39, 5-year fixed rates from 5.29. So in that space, that's very, very good. And that is literally it from the lenders in the last week. So I suspect next week will be very similar. Again, it's a 4-day week. There's not much happening in terms of the pricing. So I suspect things will remain relatively subdued. Now, the only other bit of news that I've got for you from the lenders is some change in policy. And this is from the Cumberland Building Society. Now, the Cumberland are a very, very niche-y lender. We really rate them actually incredibly highly. And we use them particularly for holiday lets. So they've got loads of great criteria. I think one of the key things for these guys is when they're looking at lending on holiday lets, they are underwriting based on the actual holiday let income the property will generate rather than a notional AST rental figure, which quite a few of the lenders will do. So it's quite interesting to see some of the changes that they've made. So first of all, what they're saying is that they're no longer going to take directors' guarantees, that would be a personal guarantee, unless the properties have holiday let only covenants or the society is lending to a trading limited company. So if they're looking at lending to an SPV company, what they're saying here is not going to be taking personal guarantees from the directors. Now, I think one of the misnomers here is that people say, well, okay, that means there's going to be nobody on the application form. Actually, that's not true. They're going to still underwrite the people in the background who are running the company that the Cumberland are lending to. But what they're not going to be doing is asking for personal guarantees. So that's quite a big step back, actually. It's quite interesting. I wonder what the sentiment is behind doing that. Now, they've also made a change to their fee charging. So they're now charging a 999 arrangement fee rather than a 1% arrangement fee. So obviously for on loans over £100,000, that's going to be beneficial. And they're also saying that they're no longer asking for £15,000 on a side account to cover COVID void periods. So what they were doing is saying, we're happy to lend to you, but you need to have £15,000 set aside as savings that we want you to deposit with us. So that if there is a void period because of another kind of recurrence of COVID, which obviously when we're looking at holiday lending, that was really impacted during the COVID years, you have money to be able to cover things. So they've obviously got quite comfortable with where we are on that side of things as well. So that's really great. Now, last thing is what they're saying is that Cumberland can top slice if projected holiday let rental income is too low, but clients must have a minimum income of £50,000. So the situation here would be, I want to buy a holiday let property. Actually, the rental income that the property will achieve is too low to meet with the society's sort of standard criteria. However, I have an income of over £50,000 a year. I have loads of disposable income. I can clearly cover any shortfall. And so the Cumberland are saying they can now look to top slice. That's really interesting as well. So when you bring into the mix holiday letting income, no directors' guarantees and top slicing, it's just really made their offering incredibly strong. House prices. So the average UK house price was £260,441 in April, which is up 0.5% from the 257,122 recorded in March, and that's according to the Nationwide Building Society. So the annual rate of house price growth does still remain negative at minus 2.7% in April, but was still higher than the minus 3.1% posted in March. There you go. So it looks like house prices have increased for the first time in a long time. So April also saw a recovery in house price growth after 7 months of consecutive falls. While annual house price growth remained negative in April, there were tentative signs of a recovery, with prices rising by 0.5% during the month. Now, Robert Gardner, who is the chief economist, who I regularly quote here, at the Nationwide Building Society, commented that April's monthly increase follows 7 consecutive declines and leaves prices 4% below their August 2022 peak. Recent Bank of England data suggests that the housing market activity remains subdued in the opening months of 2023, with a number of mortgages approved for house purchase in February nearly 40% below the level prevailing a year ago, and around a third lower than pre-pandemic levels. However, in recent months, industry data on mortgage applications points to a sign of a pickup. This also chimes with recent shifts, and this is the bit that I think was most interesting, recent shifts in consumer sentiment. While confidence remains subdued by historic standards, people's views of their own financial position over the next 12 months and general economic conditions in the year ahead have both markedly improved in recent months. If inflation falls sharply in the second half of the year, as most analysts expect, this would likely further bolster sentiment, especially if the labour market conditions remain strong. So there you go. So the Nationwide economist, Robert Gardner, you heard it from him here. He's actually feeling relatively confident, assuming that things kind of remain on the trajectory which we think we're on now. Actually, the housing market and people's sentiment, which is so important with the housing market, is going to continue to improve, which will start to really drive things up. So I think the message is that actually, for those people who are waiting for kind of things to bottom out before they start buying again, it looks like we could be at or very nearly at the very bottom point of where house prices are going to go. And lastly for you, an update on the endeavour that is the getting back of my buy-to-let property from my non-paying tenants. So just a brief kind of recap. My tenant hasn't paid any rent since August last year, and there's been various kind of stalls in terms of getting them out of the property. There was a Section 21 notice served on them, but the estate agent put the wrong date on it, so that became invalid. Then we served a Section 8 notice on them. Then they went into breathing space. And it's just been delay after delay. So I, a few weeks ago, got my Section 8 court hearing date through for August, and that was given to me in April. So that was obviously for months in the future, which I just found really, really disheartening actually. However, at the same time, concurrently, we had running a Section 21, and the Section 21 end date came and went. The tenants, unsurprisingly, didn't vacate the property. We then applied to court. Court have finally come back and served notice on my tenants. So their end date to move out of the property is the 9th of May. So how it works from here on in. Now, just for those of you who aren't kind of familiar with this rather unpleasant journey that I've been on, is that my tenants are waiting for accommodation from the local authority. The local authority have said, essentially, sit tight until you get a letter from the bailiffs. We're not going to help you. So we're kind of now just going through this arbitrary process. The whole thing is so bent, honestly. But we're going through this arbitrary process to get to the point where the tenants receive a bailiff's letter. Then they can go and speak to the local authority and try and get some housing, and then they can kind of vacate. So where we are at the moment, so the courts have said to the tenants they have to leave on the 9th of May, assuming they don't move out on the 9th of May, and I'm like 99.9% certain they're not going to. At that point, I can apply to the court for a court bailiff. Now, my understanding is that then this can take a further up to 3 months, which will lead us up to where we're now, May, June, July, August, so essentially a year. And then the bailiff has to give the tenants notice that they're coming round, that has to be 2 weeks. So I think realistically, my worst case scenario for getting this property back will be the end of August, which is unthinkable really. How can someone not pay rent for a whole year and it just be on the landlord to have to cover them? I don't understand. Anyway, I'm not going to whinge. But the good news is we've moved on a step. So that's for me really, really important. So when I got this letter through from the court, I was absolutely delighted. So I will let you know what happens on the 9th of May. I'm, like I say, very confident the tenants won't vacate. So then we move on to the bailiff stage of things, which is a whole new world of excitement in terms of what you have to go through. So obviously I'll be sharing that with you here. And that's me for this week. Thank you, as always, for joining me. I hope you found that helpful. Sorry it's not been kind of bumper full of information this week. But look, hopefully next week we'll have some more fantastic news for you. So it's all for me today to do is wish you a really, really lovely coronation weekend. I hope the weather is kind. I hope you have an amazing time. If you have any questions, we're open all the working days over the course of the next week. So please do give us a call, 0345 345 6788. Don't forget there is an expectation that base rate will going up in May between 0.25% So those of you who are on variable rates, now really could be a very good time to start reviewing your options if you haven't yet done so, and we'd love to help you with that. Have a great week, take care, and I'll see you next time.